Hey guys, been a while since I did a video. Hopefully I can change that now that I'm gonna have some spare time on my hands. Um, get some more pumped out. But today, essentially just gonna go over the basics of a stock chart and maybe look at some trend lines or some trends, uptrends, downtrends, that sort of thing. But we're just gonna stick to the basics. So what you're looking at right here is essentially it's a story. It just tells you, what the price was in the past. Unfortunately, it doesn't tell us what the price is going to be in the future, or else we'd all be millionaires. Um, but it tells us what the past is, and a lot of the times you can tell how a stock might react just by looking at its past. So that's what makes these things valuable. You can tell how a stock will react sometimes off of past resistance and support, which I'll try and leave for another video. But basically, support is where the stock won't go lower, and resistance is where the stock won't go higher. You can trade off of those zones and do pretty good. Um, so we got this in front of us. Is called a candlestick chart, and it tells us where the stock opened up, where it closed, and what the high of the stock was on the day, and what the low on the stock was for the day. Charts come in all different variations of time. You have the daily chart, which is what this is. If we go look at the weekly chart, right now we're looking at Netflix, by the way. If we go look at the weekly chart, this will tell us, this will show us a different picture, or a different story, I guess you could say. And you got 10-minute charts, 1-minute charts, 5-minute charts, and you're going to want to use a different chart for whatever you're trying to do. If you're trying to invest, maybe hold a stock for a longer term, you're going to want to look at a longer chart. So like a weekly, a monthly, a daily. If you're doing day trading, so you're in and out in the same day, you're going to want to look at more of a smaller time frame chart. Look at the daily as well as the intraday. So if we look right here, this tells us the low of we got two colors here pretty much. We got red and white. Red means that the stock was down on the day. White means that the stock was up on the day. The bottom part of the stock of the candle will tell us where the stock opened, and the top part of it will tell us where it closed. So you might see like little wicks, like this wick right here on the bottom of it means that during the day the stock went to a lower number but closed higher. We can see that if we look at the little box on the left, we can see that the stock went all the way down to 430, but ended up closing at 448. So you can see like the next day was down huge. Like it got like smashed. Bad earnings, I'm guessing. Like it just got beat down, like a woman who makes her sandwich wrong in the kitchen. Just just bad. And then we can see here where Netflix like took some crack and was like, "Screw y'all, I'm out this," and just was throwing hundreds and just went ham. So I mean, that's the basics on like this chart or on charts. We got these lines right here, which are moving averages. So we got the blue line, which is the 50-day moving average. We got the red line, which is 200-day moving average. And that just takes a compilation pretty much of the stock. That 50-day average would be 50 days of the closing price on the stock, and you can see that line right here. So we're gonna look at trends real quick. If we go to the weekly chart of Netflix, we can see that it is in, when it loads up, we can see that's in what's called, it was, well, it still is, we can see that it's in an uptrend, And there's a saying that goes, the trend is your friend, never fight the trend. So you don't want to get in a stock where, if it's going down and you're betting on the stock to go up, so you take the long position, you don't want to get in a stock that's going down. You want to get in a stock that's trending up. As you can see, it's trending up. That would be a good thing. You want to look at one that's trending down. We can look at Newell, NEWL, and you can see this is going down. So obviously you're not going to want to get in something that's going down. And don't try and be a hero and guess the bottom and then, be like, oh, I could have bought right here and it would have gone up here. No, because you'll get burnt trying to do that. Wait for the stock to show that it's changed its trend, and then get in. Don't try and be a bottom feeder and wait for the big return, because you will get busted, and that is not pretty. Trust me, I know. So yeah, that's pretty much it on the basics. Like I said, it's just basics. Gonna try and make another video on support and resistance, more in depth on what support and resistance is, because that's a good way to make some money, is trading between those two. So for today, that's it, guys. Look out for more videos. Thank you.